Acting High Commissioner, for hosting this event and inviting me to speak. Ladies and gentlemen, distinguished guests, it's a pleasure to be here. The good news is I don't have a presentation, so you're going to have to focus on my face, I'm afraid. But it will be short and sweet, I hope to the point. My name's Sam Hoexter. As introduced, I'm the regional head for essentially half the world, really, including Sri Lanka, I'm pleased to say. For those who don't know UK Export Finance, we are the UK's export credit agency. What's an export credit agency? Well, in fact, many of the economies around the world have an export credit agency, or an ECA, as I'll refer to it henceforth. The Americans, other Europeans, Canadians, Japanese, including the large emerging economies, China, South Africa, India, etc. We all do the same thing, and that's to support, in our case anyway, UK-based companies looking to win business overseas. And that includes very much in Sri Lanka, and I'll touch on our appetite for Sri Lanka in particular. It's probably worth explaining what we mean by a UK exporter, because I think some clients around the world think that it has to be a British company that they need to purchase from in order to benefit from the products and services that I'll explain. In fact, a number of our clients that we support, a number of exporter clients, are international corporates. GE of the US, Siemens of Germany, Alstom of France, Bombardier of Canada. Because they all have operations in the UK, they have UK subsidiaries, they count as an exporter for us. We're not so focused on ownership. What do we mean by an export? Again, it probably is looser than you might think. It doesn't have to be a tangible manufactured good. Of course, we do support manufactured goods, trains, planes, and automobiles, etc. But in fact, the majority of our the exports that we provide for those exporters in the room are services. So EPC contracts, architects, design, consultants, even law firms. We also support intellectual property, so IP would also count as an export. So that's what we mean by an exporter, that's what we mean by an export. I won't go into the UK government setup that much, it's not the most interesting topic, but I think for both buyers and exporters in the room, it's important to know who does what, because my colleague Michael is here from Colombo, or High Commission Colombo. And what I'm keen to say is that if as a buyer, whether you're in the Sri Lankan public sector or private sector, if as a buyer you're interested in the services that I'm about to explain, you'll see that we, UKEF, need to see some UK content. We need to see at least 20% UK content. I'll explain what I mean by that. If you're scratching your heads wondering where that UK supply is going to come from, then please give Michael and his colleagues in the High Commission a call, because he will be able to guide you around the UK supply chain. For UK exporters in the room, and outside the room of course, if you are interested in doing business in Sri Lanka, please register yourselves both online and with Michael, so that the team there are aware that you want to do business in Sri Lanka, because we, the Export Finance Agency, cannot do business unless there's UK content. There'll only be UK content if UK supply chain can be identified. Anyway, enough of that. The products and services essentially fall into two groups. There's a group that we use to support exporters based in the UK themselves, and that would include essentially trade finance type products, so working capital, performance bond support. If you're winning contracts in Sri Lanka, you may be required to provide a performance bond. If your bank is struggling with providing you with a bond or working capital, then we might be able to help, and we help essentially by risk sharing with that bank. We can look to guarantee up to 80% exposure that the bank takes on you for that working capital loan or performance bond. We also have an insurance policy. We can't compete with the private insurance market, so you'll need to go to a Lloyd's of London agency or a broker. But if you want to be insured for your product or your service, and this applies anywhere in the world, I'm not insisting that you'll need it for Sri Lanka, you'll be unpleasantly surprised actually which parts of the world may need insurance, and this is not necessarily Sri Lanka. If the private insurance market are reluctant or unable to help, then you can consider approaching us, and we might consider providing you insurance to cover you for payment default for any contract that you have. Apologies, I'm having problems with the micro. With the insurance product. Thank you. So I'll race on. Those are products that help you, UK exporters in the UK, working with your banks and us. For my friends from Sri Lanka in the room, as potential buyers of UK goods or services, we have products that will help you such that you're in funds to pay for the contracts that you're looking to purchase or procure from the UK. What do those look like? Well, all ECAs offer something similar. Essentially what it looks like is, well, perhaps the best way of explaining is if you had a project like this, a value of capex, I'll pick a figure of 150 million US dollars, let's say. Banks might be agreeable to lend you the money to procure to pay for this project. Banks will probably charge you an interest rate of X. That X interest rate will reflect the bank's cost of funding and the risk that they deem you to be. I don't know what that interest rate is. I honestly don't know whether it's Sri Lankan government or private sector. The difference that we can make to Sri Lankan buyers is if we are willing to guarantee the banks, and that's 100% unconditional guarantee, then the banks, instead of charging an interest rate that reflects essentially the risk they deem you to be, they will charge an interest rate to you which reflects the risk that they deem the UK government is, because they're getting that 100% unconditional guarantee from the government of the UK. Reduced interest rate is obviously more attractive to you. It works for us because that would encourage you to purchase that contract from the UK exporter. It's almost as simple as that, really. It's through a UK government guarantee, we are reducing the interest rates chargeable to the Sri Lankan buyer. Point number 2, and by the way, other ECAs offer this, I'll be completely honest, but this is the classic ECA product. Point number 2 is on repayment tenors. Using my example again, banks might be willing to lend that Sri Lankan buyer up to 5, maybe 6 years, for example, perhaps longer for Sri Lankan government. The difference that we make is if we give a guarantee to that bank, instead of the 5-6 year repayment tenor, they might be willing to lend longer. We actually allow a guarantee to go up to 10 years normally. For a project finance transaction / PPP, that could be 14 years. For some sectors like renewable energy, it could be 18 years. And that does not include the construction period. So you could have a project finance refinery, for example. It takes 3 years to build, interest paid only during the construction period, and then under a project finance structure up to 14 years. So you're thinking door to door of 17 years, which we think it should be quite attractive. I keep talking about other ECAs. It's worth saying, to be completely upfront, is that we are aware that some ECAs offer different terms. China, for example. The reason the Chinese ECA is able to offer different terms is because they are not part of the same ECA agreement that we are. Essentially, that agreement is an OECD consensus agreement. So I mentioned Europeans, Americans, and Canadians, etc. There will be different terms offered by different ECAs. What we would say is that you're getting the ECA package from the UK, reduced interest rates, but you're also getting the quality of the UK offer, which of course the UK exporters in the room will be able to better express than ourselves. The final point is where we, the UK, can distinguish ourselves from other ECAs, and that's the amount we need to see from the UK. The Americans, I understand, require a minimum of 90% US content. Europeans could vary between 40 and 50%. For us, we need to see a minimum of 20% UK content. How do we calculate that 20%? Well, if you remember my example of the $150 million project, if $50 million was work done by Sri Lankan contractors, what we would call local content in that example, and $100 million was done by international contractors, whatever had to be imported into Sri Lanka to do the project, then we need to see at least 20% of that international work come from the UK. If there is that minimum 20% coming from the UK, then we will consider supporting up to 85% of that international contract. Plus, just to confuse you, we can also support some of the local content, so the Sri Lankan contract work. So to keep it simple, minimum 20% from the UK could unlock up to 85% support for the total imported amount into Sri Lanka. Sri Lanka, we have between 500 and 750 million pounds for, just Sri Lanka. And that is available to public borrowers, private sector borrowers, PPPs, once we can get comfortable with the risk sharing mechanisms under the PPP. And it's available as of today, and it's not an annual amount, it's there until it's expired. So obviously the reasons I'm very keen to do these events and work with Michael here is to make sure as many people as possible know our appetite. I'll finish off with two more points. The first is sectors. We'll do any sector, pretty much any sector, including energy, oil and gas, power, renewable energy, soft defense, etc. We will cover it. We're not just an export finance agency anymore. I mean, obviously we are, but the last few years we tried to be a bit more proactive. I think we got, under our old guys, ECGD, a lot of press for doing the deals with the big boys, the Rolls-Royces of the world. Airbus is another key client. Of course, we continue to do business with them, but what we're keen to state is that by numbers, if you look at our annual accounts, by numbers, the majority of our exporter clients are SMEs, MSBs, for example. So please, as an SME, MSB, don't be put off with using us, because in fact, by numbers, as I say, you are in the majority of those we support. But I did want to say that we're not just an export credit agency. Our latest concept, and this I raise in the context of the presentation just given, is that if sponsors in Sri Lanka are interested in what UKEF can offer and are interested in what the UK supply chain can offer, then what we like to do is host an event in the UK, or we'll go to Colombo or Sri Lanka. We will sit next to the sponsors who will present the project. We will then explain our finance offer and how much appetite we could have for that project. And in the room, like yourselves now, will be pre-selected, pre-invited potential UK suppliers who are interested in this project, want to hear about it, and then want, in the afternoon, where government just leaves the room essentially, want to spend the afternoon with one-to-one sessions with the sponsors to talk about how they can win opportunities for that project. We've done 9 of these supply affairs, as we call them, and they've been very successful. We've done them across hospitals, oil and gas, and power, across all parts of the world. So I'll finish off there and leave that as a seed of a potential thought, but thank you for your attention.